Hello and welcome to Moving Iron Podcast Markets with Shawn Hackett. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon has a couple great offers they're throwing around out there. One is if you need a new pair of gloves, send an email to marketing at axontire.com and they will get you a free pair, Shawn. You don't have to pay for these. Free pair of deerskin work gloves. And if you get those coming to you, you can keep your hands buttery soft all winter long, especially down in Florida when you guys are chopping wood for the winter. So it'll be definitely keep you in the right
I'm sure operators are standing on by.
They are. It's like a time life thing for all the people out there that remember that, right? And then if you want to go to the Moving Iron Summit coming up here in Nashville, Tennessee, that would be September of 23, 11th through the 13th. Axon is giving away $50 worth of registration money to the first 150 people that sign up for that. So take advantage of that. If you want to do that, send an email to MovingIronPodcast, MovingIronPodcast.com, and I'll make sure to take care of that when it comes through. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs. At Valley Transportation, our goal is to help you reach yours. And no matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has access to over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comp is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create your connected customer experience and transform how you work today. Shawn is with Hackett Financial out of Boca Raton, Florida. He's nice enough to come on and talk about what's happening in the marketplace. Shawn, how you doing this morning?
I'm doing very, very good. Never better. So
it's you got a few things, got some weather coming through. It looks like you have we've had some pretty historically cold weather to the west of the United States, up into Canada and Alaska and up in that area, and we've had some very warmer than normal temperatures in the east, and those two forces are going to collide here over the high plains, which I don't know why we get picked on so much, Shawn, but we sure do. And there's a blizzard coming this way, and so it looks like the backside of it's going to be a blizzard and the front side of it's going to be some pretty severe weather. So I guess looking at your model, Shawn, what are you seeing happen with that?
Well, we've been saying all along that we felt that this winter would be cold, not Arctic frigid cold, more like polar cold. Because we're anticipating the La Nina to start to weaken, that means more moisture in the atmosphere, which tends to increase the potential for snowfall, even though you're not going to get necessarily the same bitter cold that, like a polar vortex or sudden stratospheric warming event kind of thing. But we think it's going to be a short winter. So kind of quite a bit different than last year, which last year was more of a long ongoing thing. This is going to be short and sweet to the point. Going to be over in late February, and then springtime weather in March. So that's what we see. And the worst part of the winter is going to be that front half, that we're sort of entering in now in terms of the cold snaps and the blizzard-like conditions and that sort of thing. That's what we're seeing for this year. When we think of that, it means energy demand is going to be down. If you look at the whole winter as a whole, meaning we're going to lose a lot of those heating degree days from not having the winter in early, which is actually kind of a good thing, considering some of the shortages we have here, some of the shortages they're having in Europe right now. Europe's had some very warm weather, and so when we put it all together, that's kind of what we're seeing for this winter. And I do think it's going to allow the energy crisis to take a back seat and wait for another winter to reemerge. That's the way we're seeing it right now.
Right on. You're seeing a lot of talk right now about the La Nina and that it's maintaining its strength and all that stuff. But at the very end of every one of those things they talk about is for the short-term view of this, we think it's going to stay the same. So it's really, no one's really coming out and saying, hey, what's La Nina is going to end, we're going to switch to El Nino, but they're saying, if you read between the lines, it's what they're telling you.
Well, you have to look at what we call leading indicators that help forecast when La Nina is going to weaken. One of the things we look at is the Southern Oscillation Index. It's a measure of the pressure differential between Australia and the Central Pacific. When you have a La Nina, they tend to be the readings tend to be positive, meaning you have high pressure in Central Pacific that causes easterly winds and allows for upwelling, which brings that cold air up to the surface. We've seen the Southern Oscillation Index plunge. It actually got down to minus 31 here yesterday, which is an extremely negative reading. It's the first time we've seen a reading that negative since the El Nino of 2019. Now, just because that's happened doesn't mean La Nina goes away, but I'm saying is you need a more persistent negative Southern Oscillation Index to start shifting those winds westerly and bringing downwelling forces and bringing the warm water. So the fact that we're seeing this big shift in the Southern Oscillation Index for the first time is one of the things that's telling us that we would expect this La Nina to start weakening. And all the models have been suggesting that peak La Nina would be, late October, early November, and we would start to see weakening. Another thing is the Indian Ocean dipole has been strongly negative here the last 3 months, meaning that the temperatures in the West Indian Ocean have been cold, and the temperatures on the East Indian Ocean have been warm. And that's why you've been getting all this excessive flooding in Southeast Asia, Indonesia, Australia, India, because that tends to push moisture over towards those regions. We're seeing a distinct weakening of the negative Indian Ocean dipole. It's still negative. I think we were at negative 1.6 in mid-October, which is a very strong reading. Now we're at minus 0.85. So still negative, still, in motion, but we're starting to see the trend get far less negative. And the Indian Ocean dipole tends to weaken. A negative Indian Ocean dipole tends to weaken before the La Nina does, meaning it's a leading indicator that when that starts to weaken, it's forewarning that La Nina is going to follow behind it. There's actually quite a few other variables. We don't need to overdo it, but those are a couple of the key variables we're seeing that is telling us that this shift from peak La Nina is actually starting to take place. We're seeing the indicators that we're looking for, and that we would expect to see those sea surface temperatures in the Central Pacific start to warm. In fact, we've seen warming in the last 6 days straight in that region. So, as we've said before, you don't just turn the switch on and there's El Nino. It's a transition.
Mm-hmm.
But it does look like to us that transition is about to begin.
Right.
So,
okay. A lot of talk about China and their gradual easing away from the zero COVID policies that they have. Shawn, as you take a look at that, what are your thoughts there, and how do you think that's going to overwhelmingly, I think it's going to have a really big positive impact. I mean, obviously, you're going to do a lot of more manufacturing out of China. You're going to get a lot more feed and proteins and those kind of things back into China. Do you think that could be one of those deals that kind of breaks this inflationary move that we see around the world?
Well, first of all, is it true?
Right. That's always a good question to ask.
First of all, is it true? If it is true, when?
Right.
How quick? Those are important factors. If they're going to reopen in next summer, then we're probably jumping the gun here a little bit.
Right.
If they're going to start now and gradually work to a major reopening by March, then this would be the right time to start getting things going. It's interesting that within the last 2 weeks, we've had 2 stories independently come out saying they're going to reopen, and twice they denied that they're doing anything. Usually when governments deny stories, it's true. We can't say for a fact that that's the case this time, but generally speaking, the more a government denies a particular news story, the more likely it is that it's true. So the only thing I know to do, Casey, is somebody knows exactly what the truth is. I don't, but somebody knows what it is. The big money knows what it is. And if it's really true, we should see capital flowing back into China in a major, major way, because there's going to be, capital likes to flow into places that are going to be on the mend, that are doing better. I'd be looking at the Chinese currency to give me the signal that this story is actually for real. And what I want to see is, if you looked at the Chinese renminbi chart, there's big resistance at 14. If we can break through 14 on a weekly closing basis on the Chinese renminbi, that would say to me that we have a major reversal back up, meaning the Chinese renminbi is strengthening because of capital flows going in. If we were to see that, then it would give me confidence that some of these knee-jerk reactions to the upside are now true, and that we are going to get a tailwind of significant demand coming from China for the first time in a long time. And so that's really, to me, is how I'm trying to discern whether this is true or not. Right now, that has not happened. We're near 14. We have not gone through it, so the jury's still out. But if we get that signal, Casey, then I think that one would be thinking about how does one participate in a ascending demand picture on a reopening of China. Because we know, and we did it here, we know when the EU did it, the boomerang, at least for a little while, and demand is pretty powerful.
Right. Yeah, and that's one of those things, like, especially when you're looking at like China and what they have going on, and the impact they have on the overall world economy, just because the sheer number of people that live in the 1/7 of the world's population lives in China. So it's a fair amount of activity that can definitely be added.
And remember that they've been locking down some of the most productive parts of China, the big metropolitan areas, the people that are making the money, the people that have the resources to buy things. So even though when you look at, okay, they have 1.3 billion, and maybe they've been locking down anywhere from 100 to 300 million people, depending on what week you're talking about, and it doesn't seem like it's that large as a percentage of the whole country. When you look at who's being locked down, they're high earners,
Right.
And so you put those people back in, and it would have a pretty meaningful impact if it's true. So we're going to monitor this closely, day to day, week to week, to see if the capital is signaling that it is true. So far, inconclusive, but if it does turn out to be true, Casey, this would be the first real positive bullish demand side fundamental we've seen in the markets in well over a year.
Yeah. So. All right. So you got news coming out of Ukraine that roughly 90% of the overall winter winter grain crop anyway has been planted. And then you look at the very next story right about that is Russia hasn't done little to move forward on the access points and stuff like that to get ships in and out of the Black Sea, I guess. So how do you think the market's going to react to that? And that seems to be probably it's got to be a higher number than what they were anticipating to see planted coming out of Ukraine.
Ukraine has continued to surprise. You would think with bombs falling everywhere that, farmers would be unable to achieve the kind of activity that they've been able to achieve. But the Ukrainian farmers have proven to be extraordinarily resilient and have continued to power ahead despite it all. And they've continued to surprise. Yes, production is down. Yes, acres are down, but they're doing more than everyone thought. No one ever thought grain would come out of Ukraine, and it has. Mm-hmm. That might be just a testament to the heart of a farmer. That he's just going to farm, come high water or anything. But the wheat market's been acting bearishly here lately, Casey. We're down over $1 from where we were a few weeks ago. I know that this grain corridor deal expiration is coming up. Wild speculation. I don't know how it's going to turn out, but the market's trading like they think it's going to be extended right now. Right. That's the way they're trading the market. And maybe somebody knows something I don't know. Maybe they know for sure it's going to. Somebody knows exactly what's going to happen. I don't know. But right now, if you're just looking at how the wheat market's trading, it's just not acting as excited or as bullish as you would think it might, reaching this important expiration date. So, maybe the market will also wake up and they get surprised and it takes off, but they're acting like somebody knows this deal is going to be extended. Charts don't tell you everything, but they do tell you something. And maybe the chart's telling us to expect more bearish surprises out of Ukraine than bullish. That's the speculation I would come from looking at how the wheat market's trading right now.
Mm-hmm. All right. So you take a look at what's going on right now in cattle market as we head into this big winter storm that's coming. We've been seeing some premium kind of get built into that to some extent since the first part of the week, and you've seen some movement there. Talk about what you see out in the cattle market, Shawn. How do you think the storm's going to impact that?
You always get a bump up on these kind of things, short term at least. Obviously, the devil's in what's the long term implications versus just the short term implications. I mean, if the short term implications, some cattle, don't come to the market, or you lose some weights for a while. I mean, that can be remedied very quickly once the storm passes by. If it's something more severe, like we have in past years, we've had such severe cold, that you've actually killed off, a number of animals that won't ever come to the market.
Right.
That's different. I think this is a garden variety blizzard. I don't think this is going to be anything other than a short-term bump up in the price, a typical knee-jerk reaction that will fade once the storm comes and goes. I don't see this being, they do get blizzards in North Dakota in the wintertime. I mean, it's kind of like it happens every year.
It does happen. Yeah. Yeah, that is they tend to seem to get at least one or 12 of those a year. So it seems.
Yeah, 1 to 12. I mean, definitely in that range for sure.
So speaking of commonalities, looks like there's another storm coming towards Florida. How do you think that's going to impact that? What's that look like for the eastern seaboard?
When a November storm, it's really hard to get a big one. The conditions are just not right for the storm to be. I don't think we've ever had a storm in November that's been more than a Category 1. They're saying it might be a Category 1, maybe when it hits. Florida Category 1 is just not a big deal. I mean, it might be a big deal for New Jersey, but for Florida, I mean, gosh, Category 1. I mean, it's kind of like there'll be some flooding and could be some a little damage here and there, but as an overall impact, I don't see this being, it's a great media story, and they'll play it up and they'll show the same picture 25 times of how bad it was in this one particular area that is 10 feet below sea level. But for the most part, I'm not anticipating this to be a major issue like Ian was for Florida.
Right on. Hogs continue to get beat up here, it looks like. So I guess as you're looking at the hog market right now, Shawn, heading into this holiday season of sorts, I guess what do you see happening there, and do you anticipate any kind of a big rally there?
We had a big rally yesterday. I think we're up 4 on the nearby and up 2 or 3 on the extended contracts. Been a very much a rope-a-dope market all year, Casey. Up, down, up, down, up. It's just it hasn't been able to make its mind what it really wants to do. On the one hand, it worries that demand is going to suffer, especially as these rate increases continue to impose greater economic stress. At the same time, we have a major pork shortage in China, and China is starting to show their interest in buying U.S. pork. Last couple of weeks, we've seen exports up substantially from China. I think right now, China demand is going to win out. I think we're going to have a kind of a strong finish to the hog price as we go into the end of the year. They have to get those pork supplies sufficient so that they have enough pork to go around when they go to their New Year's holidays in January and February, and they take, a month to 2 months off. So if I'm a hog producer, you need to be looking for opportunities to cash sell on rallies as we go into December, because once they stop buying and they've said we've got enough for now, and they go into hibernation, then we're going to lose that demand, and prices are likely to give back some. So, definitely need to be paying very close attention for opportunities to make cash sales before that happens for U.S. producers.
Yep. Right on. All right, big report coming out tomorrow. Typically, the November report's not that big of a deal, but it seems like all these reports here of late have been a big deal. Shawn, I guess as you take a look at what's happening, what do you think the market is looking for in this report, and how do you think it's going to come out?
Remember, when you're as tight as we are, we've talked about this concept before, small little changes mean a lot. When you're dealing with, corn ending stocks, around 1 billion bushels, 1.2 billion, and you're dealing with soybean ending stocks between 2 and 300 million, small little changes can make a big difference in the price, especially when prices are this high. So even though this report isn't normally a market mover, if we were to get a little change, either a little extra on or a little extra off, it would have probably a more pronounced impact than it would have in most years because of the more highly charged nature of where we're at. I don't think the USDA is going to make much of a change. I am hearing some people talking about that maybe they may increase the corn yield here a little bit. And if they did, even though I don't think it would move the dial that much, we do know that exports have been weak. We do know feed demand's been weak. They might lower demand a little bit. I might be thinking that this could be construed as a bearish report, at least for the corn market. And unless the wheat market has Ukraine going for it, wheat will probably just follow corn down if, in fact, the market views this report tomorrow as bearish for the corn market. But overall, I'd be looking for some modest upside surprises to ending stocks that may surprise the market and bring some sellers in, sellers into the futures market. So.
Right on, Shawn. Well, good stuff as usual. Folks want to reach out to you and get more information about what's happening if you want to know what's happening at Moving Iron, you can do that too. Just send me an email. But if you want to get a hold of Shawn, what's the best way to do that, Shawn?
It's at Hackett, HACKETT, advisors.com. Plenty of information on there to let everyone know how we make our forecast and the tools that we use to see if those tools may be of some value to your listeners in agriculture. So
always trying to steal the spotlight, Shawn. Sorry about
that. That's okay.
Appreciate you being on the podcast, man.
Thanks, Casey. Have a great day.
All right, buddy. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC, LinkedIn at Moving Iron Podcast, and the ever so cleverly named Moving Iron Podcast YouTube channel. And that's on YouTube, in case you're wondering. So check that out there. If you want to go to see everything Moving Iron related, go to MovingIronLLC.com. See blog posts, everything that's out there for any information you're looking for is there about Moving Iron LLC. So with that, I'm Casey Seymour with Shawn Hackett. Be smart, folks. Out.
Moving iron in the 21st century. Hard work.